Hello, good afternoon. You're watching Closing Trades in ET now. I'm Anisha Jain. With me is Aisha Faridi. And after a couple of days of stabilization, we are back into the red for the Nifty, at least for the time being. We're just around that 22,100 thereabouts for the Nifty at the moment. And the Bank Nifty is the one which is seeing a bigger cut at this point of time, 22,190, yes. As far as the Nifty is concerned, though the Bank Nifty is down almost 300 points. It is HDFC Bank that is pressurizing the market right now, especially the Bank Nifty. So that's dragging the Nifty alone by 25 points. And on the other hand, PSU banking names are actually holding up in the green. So there are names like Bank of Baroda, Bandhan Bank, Axis Bandhan Bank, which are actually in the green right now. And the other space really to watch out for is the public sector entities. So a lot of these names from the public sector world, the likes of NTPC, Coal India, these are the ones which are holding up in the green. But other than that, it's very sideways and stock-specific move that we are seeing in the market, clearly lacking that kind of momentum. Earnings reaction, yes. So Colgate as well as Jyoti Labs, the numbers that we saw the reaction to in the last few minutes, they're both down in the trading session.
Oh yeah, absolutely. Just taking stock of the new debutants today, and what a dhamakedar listing it has been for TBO Tech. Open with a premium of about almost 50% to its issue price. Let's get a status check on where the stock is currently. Still holding up by about 502 points. 1422 is where the stock is. Much more muted for Aadhaar housing, although it's picked up since then, and sold also into that uptick which it saw from the session lows, which was about almost 10 odd percent of an uptick. Siemens, that's your star performer today. They've announced a sizable capex. They've talked about the energy business demerger as well. 7% higher for Siemens as we speak right now. And the brokerages as well have upped their price target significantly on this one. Some other earnings reactions coming in, positive ones from Edelweiss and Oberoi Realty. Oberoi Realty, of course, was a gap-up mover on the word go, and negative from Jyoti Labs, which declared its numbers during the market hours. So that's pretty much the state of the market right now. Let's welcome on board our chartist, and Pashupati Advani also will be joining us in just a short while from now. Soni, hi, afternoon. Let me start off with you. 2 days of a steady rebound, although a bit of a wobbly first half that the market saw both yesterday as well as day before. What's today looking like? Much listless.
And good afternoon, Aisha and Anisha. Thank you so much for having me on the show. I think Nifty is pretty much in a consolidation range between 22,100, 22,300 today. And there's a lot of resistance around the 22,300 level, even in the option chain, a lot of call writing. So I think any move beyond 22,300, Nifty can see some short covering towards 22,500, 22,600 as of now. The important thing is that tomorrow being the weekly expiry, so perhaps the move may come maybe tomorrow or on Friday. And beyond that only you can see the further trend, but as of now the support is quite intact between 22,100 followed by 22,000, and as long as this support is also getting defended, it's getting held for today and tomorrow, you can see Nifty attempting to break out of the resistance zone. Similar for Bank Nifty, it's in a very short trading range of 500 points. 47,500 is still a good support, even though it is testing it right now, and you can see that the resistance is quite intact at 48,000. So Bank Nifty can see short covering only above 48,000 level, above which it can test 48,600, 48,800 levels.
Airtel management, they're addressing the investors on the con call.
Valuation. India delivered a steady growth of 2.5% sequentially with 28,513 crores of revenue. Adjusting for the impact of the Beetle acquisition, revenue growth was 1.7%. EBITDA margins came in at 53.6%. Again, if I adjust for Beetle, EBITDA margins were 54.1%. We had a strong operating free cash flow, about 6,800 crores, which is EBITDA minus capex. Yet our ROCE for India is 9.5%, which is extremely low for a business that is so essential to the digital spine of this country. Clearly, tariff repair is needed to set this right. A quick update on each of our segments, and let me start with the mobility segment. We ended the year on a strong note with 6.7 million REC net adds and 7.8 million smartphone net adds in the quarter. This was also supported by our structural efforts to fix the
Okay, I think we'll try and reconnect that line with the Airtel management and what they're saying in the con call, because the initial numbers were just the revenue figures and the kind of performance that we have seen in the quarter gone by. We'll be more interested about tariff hikes going forward, because that is what the entire sector is now waiting for. When does the next hike really come? For now, they've said that they're looking at a further debt reduction, and the fact that they're seeing green shoots emerging in the DTH business, and tariff repair is a must to improve ROC. We know that fact. The question is, when does the tariff repair really happen? But time now to welcome Pashupati Advani also on the show. Pashupati, your first word on the Airtel and the telecom sector as a whole. Yes, we all have been waiting for that tariff hike to happen, but what's the likelihood it's likely to happen in FY25 itself?
No, I think tariff hike is coming gently. It's coming maybe faster than inflation, so it's good for all the players, starting with Jio and Bharti, and to some extent Voda, and a little bit towards BSNL. So that's helping. One of my old picks has also jumping, which is Indus Towers, which will benefit from Bharti doing well, and also Voda getting its offering and getting more money into the till. So that's another one, and it's also being included in the MSCI index. So it's one of my old favorites, because I honestly believe that telecom is going to increase, the rates are going to increase, and also that benefit will come to the people who are the back end, and Indus Tower is one of the listed back end companies in that space. So sorry to take you off Bharti, but Bharti is obviously doing well and continues to do well.
Right, got it. Okay, that's the take coming in right now in the markets. But Kunal, what is your own sense? We've definitely lifted from, those lows that we hit last week and on Monday. But does it look like it's a resilient move?
I think it's a very resilient move for the indices. We discussed this yesterday, that the India VIX has to plateau out at 2021 mark. Maybe 21.5 could be a higher territory for India VIX. But I think in that kind of a time frame, we are expecting the indices to consolidate. I think now we should be looking at 22,400, 22,200 broadly as a very immediate trend for the index. 48,000 is a major resistance for the Bank Nifty, and today being the weekly expiry, I think it's it's something which I anticipated that we would not be able to cross over at least on the weekly expiry. Hopefully from tomorrow onwards, when we start off a fresh expiry week for the Bank Nifty, we could be looking at a dash back again towards that 48K mark. So I think today the underperformance is more pronounced towards the Bank Nifty, but I believe tomorrow could be a day where you may see some bit of outperformance coming in. So that could be just a nominal short-term trade, but net-net I'm expecting the indices to consolidate.
Oh yeah, HDFC Bank actually is sub 1450 right now. That's one of your key, pressure points on both the Nifty Bank as well as the index as well. That's down about almost 1.6% as we speak right now. And similar is the state with some of the other large private banking names as well. But Pashupati, I mean, on a consistent basis, you are seeing select private banks still underperform. What would you attribute the reason to? And would you say that maybe this is a good buying opportunity?
No, I think it will be a good buying opportunity, but I don't believe it's net. What is happening is the NIMs are getting thinner because the cost of deposits are going up. I mean, I saw something that crossed my box the other day, which is like over 8%. So, I mean, for a deposit. So I think that banks are starved for deposits, and they're not really giving a lot of money over to 10. I mean, there's some commercial loans being given at 12, but most of the big business loans are being given between 9 and 10. So the spreads are wafer thin, and you don't actually have much room for any kind of non-performance. And there is some non-performance. So I think that's putting a pressure on them. HDFC Bank is a special case because the merger of HDFC and HDFC Bank, branch consolidation not easy, sacking people is not easy, opening new branches and closing old branches is also not easy. So it takes time. It'll be a much stronger bank in time. I mean, much stronger once it gets its act together. But getting its act together is very, very difficult given the constraints, because I don't know if you're aware of this, but if they shut a bank license, they'll shut a bank branch, they'll never get a license to open another bank branch. So they have to move bank branches. And that's a cumbersome process, and it takes time. So, Aisha?
Okay, so that's the point as far as some of these banking majors are concerned and the kind of other operational issues they have to take care of. But in the meantime, industrials is one space that has been doing very, very well for itself. But Sony, on the charts, would you still recommend a fresh buy on the likes of EBB, Siemens, Thermax after the kind of up move we have seen over the last 1 week?
I think it is wise. Of course, they've given a good fresh breakout, and individual stocks that you just mentioned. Of course, but any sort of a 2 or 3% dip from current levels, and that would be an ideal zone to just reinitiate the longs. Just talking about one example, if we take the max from current levels, the breakout that has come, it's actually above 4880, 4900 levels. So I think any move towards 5000 to 4950 can be the ideal zone to just reinitiate the longs. I think the stock has still a lot of upside momentum and can retest the 5400 levels again.
Right, okay, that's where the market is right now. But Pashupati, I mean, what's the best way to actually play the election uncertainty? Kunal was just telling us that there is a lot of short pile up in the system. That's, I guess, bound to happen. But would you say do nothing? Maybe is that the best opportunity, or sit on a pile of cash?
Honestly, if one was being prudent, I would actually take money off the table in the market and wait for the actual election result. We're hearing things from all over the place. I personally feel the BJP is going to make it, and therefore things are going to get back to normal and we'll have a jump. But, there's an awful lot of doomsayers out there that say that, they're not going to make 250 and India as a unified is going to get the majority and they're going to take over the government. So if that happens, then, I think the market's in for a bit of a dive, which is why you've got these shorts happening. This is not the normal election where, if things are going to be, everything is fine and things are just going to move on. This is a tight one. For some reason, there's been some pushback against the incumbent suddenly in the last 30 days or so. And I think that is, and we're also seeing in other markets where certain strong incumbents have had setbacks. They've not been kicked out, but they've had setbacks. So I kind of feel that it's going to be similar here. There will be lesser seats for the BJP, but I don't think they're not going to get the majority. That's my personal opinion. And therefore, I'm a buyer at dips, and may the shorts come to me.
Okay, Pashupati, stay with us. Lots more to talk about. For now, we're going to take a very quick break. HDFC Bank, yes, quite a drag, but Coal India, Cipla, M&M, that's where your big movers are. We're closing trades right here in ET now, still muted, 22,249, and the index, a down tick of about almost 5960 odd points is what you're currently sitting at. On the big movers, of course, are Siemens, Can Bank after that stock split. PFC is a big mover today, about a 4% uptick is what you're seeing on the stock. In fact, we should bring up our interaction exclusive with the management as well. We'll play that soundbite out for you. Cipla has been holding out well after that 2.5% of promoter offloading in block deal earlier today, and Coal India is the other winner in trade. Colgate-Palmolive down 6% after its numbers. AU Bank, Aarti Industries, Bosch, ICICI Pru Life. You can't really drop any trend either in the winners or the losers. In fact, before moving forward, let's hear out that soundbite from the PFC management.
We have already supported around 25% of the renewable capacity, and we hope to maintain a similar share going forward also. We have the largest outstanding book for the renewable, which is above 60,000 crore, and cumulative basis, if you ask me, then we have sanctioned around 2 lakh crore and disbursement is more than 1 lakh crore towards the renewable sector.
Another thing which caught my attention was your cost of funds, which has reduced. If you have the comparative figures, it's at 7.37%. Do you plan to maintain this at this environment per se, where lenders are finding difficult to manage cost of funds?
See, the cost of fund, I agree that it largely depends on the market dynamics. If the overall cost of funds is increasing, then since we are borrowing from the market, for us it has also to increase. But however, we are managing in 2 dimensions. One is prepayment of the high cost loan and replacing it with the current cost or the lower cost of funds. And the second thing is maintaining a proper mix between the foreign currency borrowing and the domestic borrowing, that too between the bonds and the term loans. This is how we are able to achieve the reduced cost of funds as you are mentioning. Reserve Bank has always been giving guidance about the non-performing asset or where the restructuring of the project financing is done. So earlier they said that if the DCCO is extended beyond 2 years, then you have to provide for 5%. Still.
Okay, so that's the management of PFC talking about the growth forward. The stocks of Bharti Hexacom and Airtel, both the stocks are actually doing quite well right now. The management is talking on the con call about the way forward for Bharti Airtel, and that's definitely given some sort of support to the sentiment because that stock has shot up quite a bit. Can't see anything that material to actually kind of deserve that excitement. They are, yes, talking about Airtel France and the Airtel Finance scaling up quite well, serving 4 lakh customers and disbursing loan of over 2,000 crore. And growth tailwinds in the non-mobile portfolio is something which is also aiding the sentiment. And tariff repair, of course, is an imperative to improve the ROC. So those are some of the statements coming in. The stock may be just reacting, hoping that there will be more clarity on the tariff revisions as well going forward. Other than that, well, it's of course the new listings on the bourses. So TBO Tech is now up almost 54%, while Aadhaar continues to be a bit more muted in comparison. Pashupati, have you got a chance to look at some of these recent IPOs? And of course, Go Digit is also underway. First day today. Any recommendation if you have anything from the primary market or some recent listings?
The thing about the primary market is it creates a lot of excitement in the beginning, and you can have fun if you are playing with small numbers. If you look at every study that I've seen that shows IPOs 12 months out, most of them are either back at the issue price or slightly under, and very few of them outperformed. Of course, you cry about the ones that have done well, but you know they sort of come back to the mean. And I don't investment bankers try to price things aggressively. If you just be a little patient, and you tend to see stuff back. So I think that's not a bad thing. But as I said, as a small investor, it's always fun to be in IPOs. You make a little bit of money, and there are some genuine companies that are worth buying. So it's worth doing it.
You know what? Let's hear out from both the managements. We spoke with them right after they listed.
The next few quarters. So from an absolute capital.
Okay, we're going to play that soundbite in just a short while from now. But yeah, TBO Tech is still holding on to its gains. Aadhaar has had a bit of volatile ride. It started off at a very, very somber note, then picked up about almost 10% from the lows, and then again petered down a little bit from there. But I think it's still holding out in the green. But let's hear other managements now.
Being a platform business, our growth plans are largely dependent on building the size of the network and increasing more transactions on the network. That is what has given us growth in the past, and we are hoping that is how we will continue to grow in the future.
The company, we believe in acquisitions. We have done 4 in the past, and I'm sure as we move forward into our next years, we'll be looking at some potential acquisitions in India and overseas.
Europe, just improving the quality of the platform, which requires a significant investment in tech and data, and that is something that we've been doing in the past, will continue to do in the future as well. And finally, in all of these elements, there is always an opportunity for inorganic growth, which we will look at selectively as and when a good opportunity arises.
Shareholding pattern from a current Blackstone holding of 98.7% drops by 22% to about close to about 75.8%. Asset quality well within control. NIMs currently at about 8.5, 8.9%. The major contributor to NIM happens to be spreads. We are very comfortable with the current spreads that we are operating in. So I don't see any reason why there should be a dip in the NIM. From a pure compliance perspective, as an organization in the last 14 years, we have ensured that all regulatory compliances are in place.
Industry structure is concerned, I'm glad to see that VI has raised money, and I really wish them well. I think India will be well served if it has 3 private operators working there. Whether we need to push harder, we are pushing hard every day. So this is an ongoing effort. It's always been a brutally competitive marketplace ever since I've been around and ever since the company has been around. So, ups and downs keep happening. It's a volatile market sometimes, but you just need to be at the top of your game in terms of execution for you to continue to deliver sustained performance.
Thank you for those responses. A follow-up to your tariff repair comment, right? And you called out that, let's say, today you are closer to 10% return on capital. And for that to, let's say, meaningfully improve, there probably needs to be multiple large tariff hikes, right? So, like, how do you think about the path to that? I mean, do you think you would prefer to do multiple smaller tariff hikes over a period of time, or let's say 1 or 2 large tariff hikes? And what really needs to happen for that eventuality to really play out in the next, let's say, 6, 12, 18 months?
I think that, we have done what we could. We have moved up the entry-level tariffs on feature phones. We have tried to sort of drive all the levers of ARPU upgradation across the multiple levers that we have using lots of digital analytics. But at the end of the day, it is a competitive market. And, repair will need to happen across the industry. It's, just us doing it. We could do it, we could lead it, we could start it. But the fact is that if there is no, if competition doesn't follow, then it will hurt us. And that's a challenge. So we just have to wait and see when the time is right. My own sense is that you will need substantial repair in the industry. We're already at just over 200 rupees ARPU. I think the right level of ARPU, even at 300 rupees, would still be one of the lowest in the world. So there is substantial repair to be had in the industry. Now, how that happens, I think I can't sort of guess, but we'll see how it plays out.
I'm going to try this in one more time. So in terms of ARPU, do you think closer to 250? I think in one of the interviews, I think Mr. Mittal had mentioned closer to 250 by next year. Is that possible, or you think still too many moving parts to really say something concrete?
I wouldn't comment on a specific milestone. I think all I'll say is that repair is sorely needed in the industry. I think all the players need it. So it's not just one player or the other.
The next question comes from Mr. Kunal Vora. Mr. Vora, you may please unmute your side, introduce yourself, and ask your question now.
Yeah, thanks for the opportunity. First question, I wanted to get your sense on how are you looking at the industry customer additions going forward for the next couple of years, and how do you see the distribution of that amongst the three players? And also in terms of tariff hikes, I understand already a discussion has happened, but say how much tariff hike do you think the customers can absorb, considering that mass consumption overall is not really doing well? Do you think that going from 200 to 300, the customer can absorb that without seeing customer losses?
I think as far as customer addition is concerned, I think we've seen a growth in smartphone shipments this year relative to last year. And I had mentioned, a few quarters ago when the chipset shortages hit us and when chipset prices went up sharply, that led to increase in smartphone prices. The entry-level smartphone prices at the time used to be about 5,000 to 5,500 rupees. That suddenly shot up to 8,000-9,000. And, we had conversations at that point as to the slowdown in upgradation. And I had mentioned that, it takes, in any consumer market, when there's a price shock, people take time to absorb the shock. Because somebody who wants to upgrade from a feature phone to a smartphone comes into the outlet, suddenly finds that the price has gone up, goes back. But then the next time they come around, they're determined to actually buy it because now they're used to a new reality. So I think that's what you've seen in the increase in smartphone shipments relative to last.
Welcome back. Well, stocks of Airtel, Bharti Hexacom as well as Indus Tower is in focus. Just wanted to highlight Indus Tower for now. My colleague Somit is helpfully pointing out that the company is saying in their con call that the capex has actually remained elevated in FY24. It's pretty much peaked in FY24 and it's expected to moderate from here on. That means it might be a bit of a negative news coming in for Indus Tower, that Airtel is going to invest less in capital expenditure, and that's why that stock is a bit softer in the trading session. While Airtel is testing the highs of the trading session, that stock is doing quite well for itself. We're also watching out for what's happening to some of the other big majors in terms of the moving parts coming in. So, of course, names like Tube Investment is showing a bit of a recovery right now. Kirloskar Pneumatic is 10% higher. Shipping Corporation of India is the other one. But Brigade is the interesting one, which is higher by 7 to 8% today. Kunal, any view on Brigade Enterprises specifically or any other real estate name that specifically stands out?
So Bombay Dyeing today I think is up some 12% or 13%, I think from that pack. you've seen, I think if I'm not wrong, Sobha was also one of the few ones from the non-F&O stocks which had also shown signs of good price action for itself. Brigade, on the other hand, I think has been a consistent chart, but nothing major in terms of the very recent price trends for the stock. Volumes today are a lot more lower than the volumes we'd seen for the stock locking yesterday. That indicates that maybe it's just low volume buying for the stock price. Nothing major in terms of the chart. So I'll probably stick to the the ones which I've been recommending earlier, the likes of Anantraj, TLF, as well as Godrej Properties.
Yeah, along with Brigade today, you've also got Oberoi Realty, which has reacted very positively to its numbers. That's been holding up very smartly around 3% uptick. The other stock which has been doing very well ahead of its numbers has been M&M. I don't know if we can bring up the 7-day chart or not. That's seen a fabulous run up. Yes, it has had its share of down days, but there you go. It's had a 4% move in just the last 7 trading sessions alone, and this is, mind you, with a weak wobbly market too. But let me take it across to Shrishti and find out what the ET Now poll is penciling in as to what the numbers are going to look like tomorrow.
Well, yes, M&M stock is trading near its all-time high levels just ahead of the earnings, and this time around we are expecting a decent set, because do remember the mix was quite distorted because on the back of a weak tractor sales, because their tractor sales were actually down 20% on a YY basis. But it's the auto sales and the kind of a leadership that we have seen from M&M, especially in the SUV pack, that has supported the numbers, because the volumes were up around 14% on a YY basis, taking the overall volume inching up by 3% on a YY basis. So that mix is expected to reflect in the overall numbers as well. This time the revenue is expected at 24,118 crores. That will be a jump of 7% on a YY basis. EBITDA expected at 3,032 crores, and the margins expected to be just flat at 12.6%. And lastly, on the profit figure, we are expecting a number close to 1,900 crores. But the key to watch will be actually the demand outlook, especially for their tractor sales, because this time, as we highlighted, that the tractor sales were really down. So we are expecting a cut of 30 basis point on a quarter-on-quarter basis and a decline in the FES margins. But it's the automotive segment volumes that are expected to do better, and the EBITDA margin outlook is expected to be muted on the back of a weak mix and a slight rise in the discount in their automotive division as well, which all in all big OEMs have done. But apart from the numbers, we will be watching out for the management outlook on the demand, the new numbers that are coming in from the bookings of the XUV3XO, and the automotive margins outlook as well, and if they have any new plans related to EVs as well. So all eyes on the management commentary of M&M as well. Back to you. Okay, so all eyes on the commentary. That will be important to watch. Of course, the volume figure is already out, so more details on the way forward and the launches is something to really look forward to. Dipan Mehta is also with us on the show. Dipan, hi. Just let's begin by discussing the auto sector, because this time around the commentary has been skewed a lot more towards rural. Is this something which has now become an investable idea as well? Would you take heart from the fact and believe in the rural recovery story?
Yeah, good afternoon, and thank you for having me on your show. See, I think the auto story is now almost 2 or 3 years old. Post the pandemic, we have seen a very good revival in volumes across the board, and even the average selling price also for the auto companies has gone up significantly. And this is across the board, with the exception of tractors, where there have been mini cycles, but two-wheelers, four-wheelers have done extremely well, and new model launches also have been a key highlight for the industry. Going forward, I think we should expect subdued growth rates. I think if you look at what Maruti had to say, that they expect a 2% volume growth for the passenger car segment, and also I think high base effect will come into place. So these are absolutely complete blue sky scenario for the auto industry, but there are a lot of headwinds coming in. The base effect will mean that there'll be lower volume growth rates, and even the average selling price, it seems to be flattening out, as is evident from the Q4 numbers. And lastly, I think that new model launches also have more or less kind of run their course, and whatever backlog of deliveries were there, those also, that benefit also is no longer there. So I would say a little bit challenging times for auto sector going ahead, and from that point of view, I'd like to be a bit cautious. But M&M in particular could be an outperformer because of their exposure to agriculture. And if this monsoon season turns out to be as good as the weather people have been saying, then it could be a very good year for M&M.
Yeah, absolutely. And it's reflective in the stock price as well, which is pretty much around an all-time high as we speak right now. And dip and high afternoon, that's pretty much the case with ABB Siemens as well, right? Cap goods also are the ones consistent earnings growth. And yeah, let's not even talk about the valuations that they quote at.
Yeah, every time the result comes of ABB and Siemens, I just look at the trailing 12-month PE ratio and I'm just astonished. They both trade at 100 plus PE multiple. And, not even Nvidia trades at 100 plus PE multiple, nor does Amazon, Microsoft, Apple. I don't understand, how these stocks can trade at these PE multiples and how can we justify buying into them. End of the day, they are cyclical businesses. Sure, they have an upswing just now because the capex cycle is on the upswing. But look, I've been tracking these companies for the last 30 years, and there are long periods, 3-4 years, where the earnings go nowhere. They are declining also. So how can you pay such a high valuation for a cyclical business such as that of ABB or Siemens for that matter?
Yeah, that's a question we actually also posed to Renubeet Pugalia of IIFL Securities, whether there's value in any of the stock and whether somebody should hazard a buy right now. Listen to her view coming in. She believes that perhaps the likes of BL, L&T provide a better risk reward than ABB Siemens. Listen in.
I think Siemens energy demerger was expected. There were announcements to this regard earlier last year. More importantly, the last transaction which the Indian entity had proposed for LV Motors, there was a given valuation which minority holders turned down. In this case, the valuations are open. It's more of an open market discovery. It's a vertical demerger followed by listing. So to that extent, it is very fair for both minority and other shareholders also of the Siemens company in terms of open to them in terms of realizing the value and the potential of the earnings visibility that we see in this name. And today, given the outlook that is there for the global grid equipment market, not just India, but even developed countries and overseas, I think the portfolio looks extremely attractive with new capex across business segments, including new technology products like Blue GIS and other solutions. So I think to that extent, Siemens Energy looks an attractive bet. And until demerger and listing date, we may continue to see Siemens Limited, the listed company, trading at slightly more rich valuations till the record date approaches.
Okay, so that was about industrials, but chemicals is the space which is coming back as well. Though there are mixed views coming in, the UPL management commentary suggested that FY25 is going to be another year of a bit of a sluggishness and recovery is expected in FY25. But then UBS analysts believe that it's the right time to buy these stocks, at least for that recovery. And they initiated coverage today on the likes of PI Industries, Naveen Fluorine with the buy rating and substantial upside from the current market price. Dipan, what do you think where we are in the entire chemical cycle? Is this the right time to buy?
No, I don't think so. And the thing about chemicals is that, the street really started giving very high valuation multiples to these companies, thinking that there would be structural growth stories. And this entire China plus one investment theme gained a lot of popularity. But, a year and a half down the line, we have seen a lot of cyclicality in their earnings. And Chinese exports also have come back very strongly. And this China plus one strategy is going to is a much, much longer play. 5 years, 10 years, who knows? So from that point of view, paying such high valuations for businesses which are essentially commodity type businesses, sure, they do have long-term supply contracts, but there are risk factors as we've seen in Aarti Industries. So looking at the entire picture, I'm not that positive on chemicals. It's a difficult sector to track also because volume of sales is not transparently known immediately month after month, and pricing also keeps on fluctuating. And if these stocks are trading at P multiples of anywhere from 30 to 50, 60 times, that isn't really an appealing story. So I would just like to put a pass on the entire specialty chemical basket. But you did mention about PI Industries. So that's a different, business model altogether, where they are doing contract manufacturing for agrochemical companies, the large ones. And there, I think there is high degree of visibility and stability of earnings and business volume. So that certainly is a stock worth watching. As a disclosure, we and our clients are invested in it. And another segment within the chemical space, which will be very, very interesting, is the agrochemical place, like companies like Dhanuka Chemicals, Dhanuka Pesticides, Rallies India, and even PI Industries because of the domestic business as well. If the monsoons are good and if the crop output is great, then typically towards that end of the monsoon season, we see a very good big uptick as far as pesticides and agrochemicals are concerned. And these companies are trading at reasonable valuations, and they could surprise on the earnings front when we look at the September or December quarter earnings.
Dipan, the other thing is, of course, many are sitting on the sidelines, keeping the powder dry for the event uncertainty. That's, the election outcome to get done with. What is it that you buy then after that? If indeed it's a continuity of the current regime, which seems to be the case.
I think that if the government comes back with a stable majority, then the best stocks to buy would be the defense stock, PSUs. It could be PSU banks, other PSU engineering companies. I still feel that in our portfolios and what our portfolios I see of a lot of clients, people are underweight public sector enterprises. And that's one segment that one should look at. If there's a deeper correction, then that's one segment that one should try and load up on. Apart from that, I think banks also are getting into a nice buy zone. And I'm keeping an eye on the inflation rate. And if there is by chance liquidity tends to ease, I think liquidity will ease before the RBI decides to cut interest rates. Even a sort of mild easing of liquidity will lead to a material improvement in the net interest margins for a whole host of banks and NBFCs. And that will support their volume growth and profitability as well. And still, I think the NPA cycle is holding up pretty well. So I think that these are the two segments which look interesting. Other than that, I think so far, if you look at the earnings season, I think pharma companies have also come out with very good set of numbers. And I don't know how long this kind of price discipline in the US generic market will last. But if there are certain structural changes over there, or if the price erosion has got curtailed, then I do feel that that's a segment also where investors can get overweight on.
Of that space and keep an eye out on those factors. But let's take it across to Ansh to get a gist of which are the big price volume buzzers in the trading session today. Ansh?
Right, so Oberoi Realty will be the first stock in focus as the stock has given a breakout from its cup and handle chart pattern, touching record high level as well. Also, the breakout was backed by volume of over 10 times its average trading volume of last 10 session. Also, the stock trades above its key DMA level, which adds to the optimism in the stock. Apart from this, Colgate will also be in focus as the stock has actually given a breakdown from its head and shoulder chart pattern with volume of over 2 times its average trading volume of last 10 session, showing very negative sign in the stock. Lastly, ITI will be in focus as the stock has actually given a breakout from its downward sloping resistance trend line. Also, it has surpassed above its 100 DMA level, and the breakout is backed by volume of over 18 times its average trading volume of last 10 session, showing very strong participation in today's breakout. Also, if we see the stock on a weekly chart, then the stock seems to have formed a bullish engulfing candlestick pattern, which usually indicates a potential reversal in trend on upside. So keep an eye on these stocks.
Right. Okay, those are some of the volume buzzers that you're currently seeing in trade. And, it's really a selected list out there. Cipla is holding out well, PFC, Coal India, Canbank, Siemens, that's where your gainers are. And, of course, M&M, Bharti as well, holding out pretty strongly. L&T is not looking all that bad at all as well. But, Dipan, what's been your read-through from earnings so far as to sectors where you think growth is going to be a challenge from here onwards, be it a base case scenario or a slowdown per se?
That's a tough one to answer. Let the earnings season get over and done with. But so far, there are lots of hits and misses. It's a very mixed earnings season. And even within the sectors, we are seeing very mixed signals. Like look at cement, Ultratech, Shree Cement, ACC did exceptionally well, but JK Cement, some of the other companies have disappointed. And I think we are seeing that pattern across the board. When it comes to banks, NBFCs also, there have been outliers over there, but broadly there have been a lot of disappointments as well. So it's a very mixed picture, and I'm not completely coming out of the earnings season absolutely gung-ho. It's just that earnings have come as per street expectations. A lot of it has got priced in. And there are very few companies which I'm seeing just now, rather very few, where I feel that now this earning is really a buy trigger for me. And something new has emerged, something which is undiscounted is now visible. And maybe that's a stock now which can really be an outperformer. And when you look at the valuations, they're just like absolutely mind-boggling valuations. We spoke about Siemens and ABB, but you go across the board within the consumption space, within cement, steel, automobiles, every sector we are seeing valuation multiples which are at record levels, significantly higher than what the average valuations have been in the past. And it's not that the earnings are so visible and that they'll sustain these kind of valuation multiples. So an interest is not going to come off that easily over the next several months or so, because economic activity is holding up well. So when you look at the entire picture, I fail to understand what could be that one real buy trigger which can take the market up by 10% from here. That's one thing which is perplexing, but there could be a few triggers which can take the market down by 10%. And the most important risk factor, of course, is the election outcome.
Something you have to watch out for, but other than that, earnings season hasn't really delivered anything major. That's the verdict coming up from Dipan. But the other thing that us Mumbaikars are watching out for is the Prime Minister's visit. He's expected to land anytime in Mumbai now, and he's going to visit the Ghatkopar area and is going to hold some rallies there. Let's take it across to Aishwarya, who's right there on the ground. Aishwarya, tell us what's the latest, what's the traffic situation like, how's the excitement within the BJP cadre?
Well, I'm at the LBS road currently, right at the beginning of this particular route that Prime Minister Narendra Modi will be arriving very, very soon. By around 4:45, he will be in Kalyan, and soon after that, he will also be coming to Ghatkopar. We are currently at Ghatkopar West. This is just the start of the route from where Prime Minister Narendra Modi will be conducting his rally. Going ahead, as you can see, a lot of police force has also been accommodated here for security purpose, 5,000 to 6,000 of them. And during his rally, of course, he has decided to go to Dindori, Kalyan as well as Ghatkopar for reasons, because these are the key constituencies for the Maharashtra elections, phase 5, which starts on 20th of May. And that is one thing that he needs to address during this rally. Shrikant Shinde, who is Eknath Shinde's son, stands from the Kalyan constituency, and he will be addressing the public at that point when he reaches around 4:45 at that particular public meeting. So overall, the two clans, which is the Mahavikas Aghadi as well as the Mahayuti, these two clans will be battling for Maharashtra's elections, and we'll see who gets the seat and what's in the fate of the state of Maharashtra.
Okay, we'll wait by and see that. 20th May is the polling date for most of the Mumbai region. So let's see till then what kind of changes they can kind of bring in the mindset. But time now to get the BTST trades from our chartist. Sony, tell us which are the stocks that you would recommend as a BTST or STBT?
The first BTST would be in Balkrishna Industry. We've seen a good breakout above 2,500 level today. So from current levels, one can buy, keeping a stop loss of 2460 and a target of 2600, 2620 can be seen with a positive view. There's also a good range breakout in Balkrishna on daily charts. The second pick would be in Power Grid. Power Grid, we've seen it sustaining very strongly above 300. That's very strong support. Earlier, it had made a high of 318, 319 from where it had seen some profit booking. It is about to retest these levels. So from current levels, one can buy, keeping a stop loss of 300 and a target of 330 can be seen in Power Grid.
What about your BTST trades?
So BEL is something which is looking attractive at 233. The stock is on the verge of a breakout, more on the hourly charts. So would suggest a target of 244, stop loss to be kept at 228. And Balkrishna Industries is something which is given a flag pattern breakout as well as a consolidative breakout on the daily charts. Would suggest a buy with 2650 as a target, stop loss at 2435.
Okay, the other set of numbers that we are watching out for is Dixon Tech today. Of course, not a not a Nifty company or anything, but a large mid-cap which is very, very closely tracked. Syrma SGS had come out with its earnings and they were rather disappointing. 2-3 days on the trot, that stock continued to be on the downside. Today as well, it's not doing much. Do you think, Dipan, this entire space of EMS or the electronic manufacturing has been overheated now and one should perhaps look at trimming positions?
Yeah, of course. I think that from a valuation perspective, you can see that they are quite overvalued at this point of time. But so long as the numbers keep coming, investors will not sell Dixon or some of the other companies. I thought that CMDLM also came with a good set of numbers, and some of the valuation multiple did get compressed because of that. But Syrma SGS was a disappointment, although they say it's transient. So yeah, it's an emerging sector. It's a nice investment theme. And if you get in at the right price, then you can ride it for 3-4 years because the business is gradually scaling up pretty well. And it's a scalable business also. And it's a trend which is gaining a lot of traction, which means that more and more companies are looking at outsourcing their manufacturing. It's a new trend. So therefore, I think it's got that space and runway for growth. But it's just that, valuations are really compelling. Like Dixon would go at, I don't know what, 70, 80 times P multiple. I've just lost track about that. And same is true with Syrma SGS as well as CNDLM. I think we are seeing a mild reduction in the P multiple. That stock looks interesting and is on our watch list.
Right. Okay. That's the view coming in on some of the EMS plays right now. But just taking a look at, some of the other buzzers in trade. Colgate, of course, has had it harsh today. There's RT Industries, ICICI Pru, MGL, Bosch. They're all the drags in today's trading session. I want to bring out some of the other losers too. AU Small Finance, Berger Paints, Asian Paints. These are also your pressure points as we speak right now. Soni, how soon before we see a material recovery play out, especially for Asian Paints? A lot of factors at play out here, and I'm going to keep the earnings aside, but that seems to be rubbing off on the entire sector too.
See, if you look at the sort of a medium-term picture from here, there is a very strong resistance of 3,000, which it was unable to cross, earlier in May series. If we, just on the downside, of course, it's not looking very strong to protect the downside support, which is around 2750 from current levels. If it breaks 2750, it can retest the lower levels of 2600. So that's quite a broad range. Any upside, any confirmed upside can only be seen if it's able to cross 3000, which may take some time. And only above that, you can see it bouncing back towards, 3300 odd levels. I think that's the level to watch out for in the medium term play.
Point taken. So that's the view coming in on Asian Paints. But in the meantime, we did speak with a whole host of managements today as well, and we'll try and play some sound bites for you in terms of what the takeaways were for the earnings as well. Because overall, as even Dipan was pointing out, it hasn't been a very, very exciting one, barring industrials and maybe some of the FMCG names that surprised. There was no other pocket which has actually managed to bring in a big outperformance. Before I play those bites, let me toss it to Kunal as well. Kunal, within FMCG, what still looks good? Because Citi, for instance, has come out with a pair trade today. They're talking about a long on Britannia and perhaps an underperform on Dabur. Is that something which is concurred by the chart views also?
Yeah, I think not a short on Dabur, but I would probably believe that the stock could be a little bit more sideways over the near term and then try and pick up pace. It's still forming a bullish flag formation on the daily charts. In fact, Dabur, HUL, both of these names, they've managed to come back and retest their key short-term moving averages. And they've not been able to retrace the entire gains for themselves. So I think that's a sign that maybe over the next couple of days, you might see these stocks consolidating, but then getting ready for a breakout potentially about their respective 200-day moving averages for both of these names. Britannia, of course, has been one of the top performing names, but I believe that I think there's one chart which is still showing signs of weakness, and that I think is Nestle. That's a chart which is still looking very weak on the short-term basis. So probably Dabur and HUL could be the potential candidates of outperformers, but Nestle could remain an underperformer.
But Kunal, what about metals? Does that look like a sustainable move?
Yeah, absolutely. I am very bullish on metals. In fact, many of the stocks today, even though these stocks have opened with a gap up and seen a mild retracement, but the kind of a breakout which we're seeing for many of the stocks, JSPL, Hindalco, JSW Steel yesterday came back towards closing towards the 900 odd levels. Tata Steel is seen almost a V-shaped recovery. SAIL is something which I think is coming back towards a multi-year high around the 170 odd mark. So I think all of those charts are poised up pretty well. And the fact that these stocks are not losing their beta characteristic even in the market gets into a correction, then a consolidation. So I think that's also an interesting sign. So I would be bullish on the metal pack. SAIL, Tata Steel would be the top candidates from the pack, and from the commodity space as such, I think Hindustan Copper and Nalco are the other ones.
Point taken. Dipan, before we let you go, a quick word on these AC companies. Today we were speaking with Blue Star and they said that the growth rate this summer is expected to be 30 to 40% versus the initial estimate of 25 to 30%. And clearly, there's a rapid growth in penetration, and the next 5 to 6 years are going to be very good for all of these AC majors. Is there any name that you still would like to buy? Voltas, Blue Star, Havells and the others?
A lot of it got discounted in these companies as well. But not a AC company, but an air cooler company, Symphony. I think have a look at that company, although we have not yet recommended it or nor do we have any investment interest in it. But it's a solid company. It's had its challenges last several years or so. But with this particular summer season, I think they could really surprise on what they can offer in terms of potential upsides. And valuations are still not out of whack. It is, I think, perhaps cheaper than all the air conditioning companies, including Havells. So I would say that there's scope for P's to get re-rated over there. And despite so much of competition coming within the sector, we are seeing that it's been able to maintain and hold its market share purely on account of its innovations, mild technology improvements, and its brand and distribution network.
Okay, Dipan, on that note, we let you go. In fact, Sony as well as Kunal, thanks so much for making time and being with us for this last hour of trading session. And it hasn't been all that bad. Yes, we're ending in the red, not the best way to end the day because there was a lot of green during the trading session, but we're just around the 22,200 mark for the Nifty. The advanced decline ratio was quite positive despite the underperformance coming in from the banking index, and that too because of names like HDFC Bank, etc., which were the biggest drags, and the private banking names were a bit under pressure. Can't say the same about PSU banking names because they managed to hold out a little better than the private banks. Airtel and Bharti Hexacom deserve mention because of the commentary that we got from the Airtel management talking about a tariff revision. So both of those stocks were in focus and can be said similar for Indus Tower, but on the negative side because capex is expected to come down for Airtel. Not a great news for Indus Tower. Industrials, they were ruling the roost today, whether it was Siemens, ABB, Thermax. These were the big movers in the trading session, and an earnings reaction coming in on the likes of PFC, Jyoti Labs, as well as a lot many other names. But that's how we're wrapping up the trading session. Thanks so much for being with us. It's curtains down on closing trades from us.